Hello and welcome to the Money Show, your one-stop destination for all your personal finance queries. I'm Kavita Thapliyal and today we have lined up a very power-packed show for you today where we'll be talking about a very special multi-asset allocation fund that's been launched by LIC Mutual Fund, and we will also look on the counter to get your mutual fund portfolio queries answered. Just in case you're watching the show live right now and want to send across your questions, you can do that on our WhatsApp number, which is 865-797-4571. You can also email us your questions on the money show at etnow.tv. So a great lineup of content coming up, but then let's begin the show and let's just talk about LIC Mutual Fund's NFO, which is of Multi-Asset Allocation Fund. The open-ended fund aims to generate long-term capital appreciation by investing in diversified portfolio of equity and equity-related instruments, debt and money market instrument, and unit of gold ETF. Now, the investment strategy, the fund managers obviously retain the discretion to adjust allocation based on prevailing market conditions, risk management requirements, and to optimize returns. The fund to invest in equity and equity-related instruments, debt and money market instruments, and unit of gold ETF as per asset allocation pattern. Now, if you talk about the benchmark, 65% is Nifty 500 TRI plus 25% Nifty Composite Debt Index plus 10% price of domestic gold. And if you talk about the fund managers, we have Nikhil Rumta, Sumit Bhatnagar, and Prateek Harish who will be handling these funds. And the NFO is also available for subscription from Jan 24 to Feb 7th, 2025. We'll have some graphics also come up on this screen before I connect with our guest today. The scheme will actually also reopen for continuous sales and repurchase within 5 business days from the date of allotment. And the fund offers systematic investment solutions like SIP, SWP to create a flexible investment plan. And we talk about minimum investment, 5,000 rupees, and in multiples of any amount thereafter. And all right, so now let's get connected to our with our guest. So that's the NFO opening and the closing date in front of you guys. But then let's know more about this particular fund and the kind of strategy this fund adopts. I have with me Nikhil Rumta, a co-CIO, LIC Mutual Fund. Nikhil, hi, good evening, and welcome to the Money Show. Thank you so much for joining us today, and congratulations for the NFO. And multi-asset allocation category quite in demand, and here we have something that you are offering, which is an equity, debt, and also gold ETF. Although we have read out the allocation, but I really want to know from you the way you have ensured that investors get a proper taste of diversification by investing sufficiently in gold and debt to balance out their investments across market caps and asset classes. Nikhil.
Yeah, hi. Thank you, first of all, for having me at your show, and good evening to you and your viewers as well. See, coming to multi-asset allocation fund, most important, directly coming to the key question which you asked, here 65% would be minimum equity, 10% would be gold, and 10% would be your fixed income. Remaining 15%, what we are planning is to manage that dynamically. I mean, this is a dynamic asset allocation fund. So we have in multi-asset allocation, we have generally 3 types of things. First is model based, wherein model throws a particular number that so much percentage should be in a particular asset class. The second is the static. I mean, on day one itself we decide. And the third one is dynamic asset allocation. We are following the dynamic asset allocation, wherein the remaining 15% would be decided or invested across asset classes depending upon the market situation. So if we experts or fund managers, we believe that equity is going to do good, then we'll invest a part of that 15% in equities. We believe that gold is going to do good, then we'll invest part of that in gold. In fact, the entire 15% can also go into one asset classes. So gold can go or reach up to 25% in this particular scheme, and 10% would be fixed income. So equity will remain minimum 65%. Rest 35% can be gold, fixed income, silver, REITs, and InvITs as well if required.
So, Nikhil, the entire purpose of a multi-asset category is to have different asset classes. And normally, equity, debt, gold, silver, REITs and InvITs is typically what the other offerings from other mutual funds are also there in this particular category. How different are you? If I want to ask one differentiating factor or a few of them across asset classes that you might have adopted, what is so different about your offering as compared to what's already in the market?
Three key differentials. First, when we talk about this asset allocation, this 15% is dynamically managed. The calls will be taken by the three fund managers, myself, Sumit, and Pratik. So we'll decide how much allocation of that remaining 15% will go in which asset class. The second is not all multi-asset allocation fund in the market have silver in it. So we have silver as well. And the third key differential is when we talk about equity, we generally have seen that the benchmark on the equity portion is Nifty 50, 100 or 500 or 200. Ours is Nifty 500 TRI as benchmark on the equity portion. Why? Because we believe that the opportunity might come from anywhere, be it large cap, mid cap, or small cap. So, because of this benchmark, we don't want to restrain ourselves that we cannot take a particular opportunity. So, that's the key differential. I mean, why have we kept that? I'll give you an example. So, when we talk about multi asset allocation fund, what people think is it's a low risk, low volatile product. See, low risk, low volatile is the outcome of this product, not the thesis of this product. The thesis is it's an asset allocator. When the investor or unit holder puts money in this particular scheme, he's asking fund manager to do asset allocation on his behalf. So once I have done those asset allocation on behalf of the investor, it's the fund manager's duty to give the best of each asset class to the investor. And giving the best of equity, we believe that Nifty benchmark of Nifty 100 or Nifty 200 might restrict us from giving the best of equity returns to our unit holders. So our benchmark on the equity side is Nifty 500 TRI. So that is the key differential which we have in our specific scheme.
All right, let's talk about commodities now. What about investing in gold and silver? How are you going to decide the approach and your exposure towards these two precious metals?
So we have our own internal models in place, which will take into account how much to invest in gold and silver. We have taken only two asset classes, which is gold ETFs and silver ETFs. I mean, if you see our seed and Kim, clearly we have indicated that it's the ETF only. And that's the key reason why we don't have any other commodity here, because we wanted to keep our scheme liquid. And that's why we are doing only ETFs here, and there are no ETFs in the other commodity. So that's the key reason why we have only gold and silver, because those are the only two where you have the ETF category. When we talk about the asset allocation for the gold and silver, we have 7 different parameters which we take into account while deciding for the gold and silver. Something like investment through gold and silver will be dependent upon the valuation, the yield profile, the currency market movement. So basically the same 7 parameters which go into formation of a model, just that we haven't given a number officially, because if we give a number, it becomes a model, and we don't want to put or restrict ourselves because of the model. And that's the key reason why we'll be investing primarily in these two only. In fact,
Sure.
10% minimum is gold, and silver
Okay.
would be our tactical allocation.
All right, Nikhil, that will be all. Thank you so much for joining us today and giving all the details on the NFO. And the NFO closes on Feb 7th for all the viewers who might be interested in putting in money over here. Thank you so much, Nikhil.